This year, I'm going to max out my Roth IRA contributions using dividends I earned from my taxable brokerage account. This strategy will convert my taxable dividend income into long-term tax-free growth assets. And in this video, I'll explain the benefits of this strategy, why I'm deploying it now, and some considerations if you're thinking about doing this. I also recorded my screen during my last contribution, so you can see how it's done inside a Fidelity Brokerage account. Hi, I'm Craig from retirebeforedad.com. So what are the benefits of this strategy? Roth IRAs are great because you get tax-free growth and tax-free withdrawals. So you want to get as much retirement money into the Roth IRA as possible. You can do Roth conversions, and I've made a few videos on that topic, but most people make Roth contributions out of earned income if they're eligible. But I'm using dividends from my taxable Fidelity Brokerage account to make contributions. So this strategy frees up our earned income for monthly expenses, and more importantly, it reduces the size of my taxable brokerage account, lowering taxes on future dividends and capital gains. So instead of reinvesting dividends inside the taxable account and letting it compound there where it's taxable, I'm going to move it to the Roth IRA and let it compound there for the next few decades. This will have to be a cash transfer. You can't do in-kind transfers. You can't transfer shares. So I can either accumulate the dividends in the cash account or sell investments to free up cash, but that can cause a capital gain. So you need to be selective if you're going to sell stocks or ETFs to generate cash. So why am I doing this now? Well, I currently have more than $500,000 in this taxable brokerage account that earns somewhere around $1,100 per month in stock dividends and ETF dividends. I've been investing for 30 years, and I started with taxable accounts through DRIPs, dividend reinvestment plans, and I didn't have a Roth until about 2010. So for the first 15 years of my investing, I was primarily using a 401k with work, a traditional IRA, and then whatever was left over would go into the taxable account. My salaried career fueled all that investing, and I was very aggressive for several years. But once I switched careers to be a full-time creator in 2022, I'm much happier, but I also don't make as much money as I did back when I was salaried, and my wife only works part-time. So both of us are eligible for Roth contributions. Plus, the contribution income limits keep rising. Married couples can earn up to $246,000 in 2025 and still be eligible for Roth contributions. Also, as a business owner, I have a SEP IRA that I can use to make pre-tax contributions, which help me stay eligible for the Roth if my income grows. And the last reason I'm doing this is because my business income is irregular while my dividends are more predictable, providing enough money to make the periodic Roth contributions. This is actually a pretty straightforward strategy, pretty simple to do. You start with your taxable brokerage account, and this is where I'm earning dividends on individual stocks I own, but you can also earn ETF dividends, or you can sell investments if you have specific investments that you don't want to own anymore, or you're looking to offload. It works just as well as long as you get this money into the cash account. Now, if you are going to sell investments to do this maneuver, you want to take into account capital gains. If you're selling something where you have a big gain, you're going to take a tax hit. Ideally, it's going to be a stock or a holding that you don't have a lot of gains or maybe a loss, or it's a bit of a dog of a holding, so you can get rid of that and put that money into cash and then transfer it over to the Roth. Once you have the money in the cash account, then you do the contribution to the Roth. For Fidelity, it's a transfer. The IRS sees it as a contribution. Fidelity sees it as a transfer. That money goes into the Roth account. It'll go to the cash portion of the account. Remember, we can't do stock transfers or ETF transfers. That would be called a transfer in kind. You can't do those. So you transfer the cash and it lands in the cash account, and then from there you make the investment. And for me, I've been using these dividends from individual stocks and putting them into either ETFs or mutual funds, and in particular this is going to go into the FSKAX, which is a total market US stock fund, and the FSGGX, and that's a total international stock fund that's ex-US. So for me, this is helping to simplify my portfolio, but it's also a good tax move because I'm getting that money out of the taxable account and into the Roth. Reminder, 2025 contribution limits. If you're 49 and under, it's $7,000. If you're 50 and above, you get that catch-up $1,000 additional amount that you can transfer or contribute, and actually fall into this $8,000 category this year. I turned 50 in 2025, so I'm going to be maxing out at that $8,000 level. My spouse, my wife, Mrs. RBD, she's going to be doing the $7,000 if we can swing it. Now, I'm not certain we're going to have enough money to put all that money into her account as well. We're planning to max out mine for sure. And then depending on the market, depending on how my business does this year, then we'll make additional contributions to her account. So for us, that's up to $15,000. For couples under 50, it's $14,000. Couples can contribute as much as $16,000 if both are 50 and older. As far as eligibility goes for income limits, married filing jointly, it's $236,000 to $246,000. Under that $236,000, you can contribute up to the max, but it phases out in that range. And that range for single filers is $150,000 to $165,000. So under $150,000 MAGI, that's modified adjusted gross income, you can contribute up to the maximum of $7,000 or $8,000, depending on your age. Now we're talking about MAGI here, so modified adjusted gross income. You start with your AGI, and then you add back in certain items, and I'll put those at the bottom of the screen. But check with your CPA or do your own research to make sure you're calculating it correctly, because that's an important piece of this Roth IRA income limit. And the limits have been going up a lot over time. This chart is the historical Roth IRA income limits for married filing jointly, and you can see in 2025 it's $246,000 at the very top, but it's really gone up a lot over the years, and I'm pretty sure incomes aren't growing this way for, at least for the masses. Some people, their income's growing past this. For a period in here, we were ineligible to contribute, but now that I'm self-employed, it's no problem. Plus, as a self-employed person with a SEP IRA, I can use the SEP to lower our MAGI under these limits. For whatever reason, the SEP IRA is not one of those add-ins that I showed on the last screen. As a self-employed or as a business person, it's an extraordinary benefit that I can lower my MAGI to make me eligible for the Roth while also contributing and lowering my taxable income by using pre-tax contributions to a SEP IRA. So when I get to the point where I make enough money to do that, I will certainly take advantage of it. Last thing I'm going to do here is step you through the process of making a Roth contribution in Fidelity. I actually did this yesterday and took some screen grabs. On the right here in my IRA contribution area, you can see I qualify for an $8,000 limit. I've done 500 so far. I'm going to do 1,000 here. You can contribute now down here, or you can go up to that transfer box, pull down that transfer box and hit that second item, transfer cash or shares between Fidelity accounts. This is going to be cash, not shares. Brings you to this screen. Let's transfer between your Fidelity accounts. So I'm going to select my individual account. I know that this is my primary taxable individual account, and I'm going to select the account that I'm going to go to, and that's my Roth IRA. I scroll down and come to this select your transfer details, and this I'm doing as a one-time occurrence. Now, I started this as a recurring automated process, and I set it up where I was transferring $500 a month and then doing an automatic purchase into one of those funds I was talking about. And I really like this idea of automating it and setting it up so it just kind of happen in the background. But I changed my mind. I decided I'm going to do this manually throughout the year. And the reason is I want to have a little more flexibility, at least for the next few months. With market uncertainty and my business is never really certain, I'd like to build up a little more cash before I start automating this and just setting it up on autopilot. So I'll transfer this $1,000 and maybe I'll go back to that recurring automation eventually, but for now I'm just doing it manually. So I picked $1,000 for this particular transfer. You can see my contribution limit of $8,000. I've done 500 this year. I have 7,500 left. So I'm just going to do 1,000 at this point. It's going to be a one-time. You go on to this next screen where you review the transfer before submitting. Gives me the details, and I've taken out all of my account details here so you don't see my account number. And then you hit the submit button. And there it is. Your request has been submitted. The money is going to be sent immediately. When I went to go check to see if the money was actually there, it did still say pending, but it gives you a confirmation number from the individual account to the Roth account, the date and the amount. And so very straightforward transfer here. Fidelity does send you a tax form for this purpose. They're keeping track of it for the IRA, and they send that tax form to the IRS, and they sent it to me electronically. But it's not something you have to actually file with your return. You just have to report that you made Roth contributions when you file your taxes. That's all for this video. I'm Craig from Retired Before Dad. If you like what you saw here, please subscribe to my YouTube channel. Then head over to my website to sign up for my free twice-a-month newsletter. Thanks for watching.